20th of March. But let's move on now and talk about our deal tracker segment. Nisha Poddar joins in to take us through that. Nisha, over to you.
Thanks for that, Ekta. Yes, let's put the spotlight on the deal street, and Prashant Mehra, the partner at Grant Thornton Bharat, joins us now. Prashant, always a pleasure to welcome you on CNBC TV18. It's quite an exhaustive report of the last month's deals that Grant Thornton Bharat has done. Now, the one highlight that really comes out quite emphatically is that the deal activity has substantially dropped on a month-on-month basis from January to February across the board under all categories. What are the reasons and factors really driving this slowdown?
For having me once again. I think, when we look at this activity, we'll really need to put that into three buckets. One is what I call pure corporate M&A. Yes, that has come down, not just from a volume, but even from a value perspective. And I think we can attribute the reasons to that, companies focusing on their organic growth. And the second thing that, just waiting for the elections to get over to see where this is really going. You're aware that we didn't really have a budget as such. It was more of a financial report. I think the second bucket is private equity. Yes, the value has come down and has been keep coming down. But as far as the volume is concerned, the volume is pretty consistent. And I think that's probably due to the fact that there is a valuation correction that is happening. Post-COVID, until about a year back or so, the values had soared as far as valuation for private equity investments are concerned, but there is some correction that is happening there. The third bucket is something that, I am not surprised, but yes, it's pleasantly surprising, is the inbound, which has been there. That's been tracking quite consistently, and now we're seeing that it's an uptake on value as far as month on month is concerned, but also volumes, which is pretty good, which shows that the macroeconomic factors of the country remain positive. We still remain as one of the most attractive destinations, and foreign capital will continue to come in and will possibly soar going forward as well. And I think that's really going to be the driver as far as this year is concerned.
Right, Prashant. Some of the important, takeaways from what you said is, of course, the equity market valuation, the overall valuation picture impacted by that, even in the private space. The elections that is going to be expected in the middle of this year. So help us understand this valuation of the equity markets as well as election. Those two factors are not going to change till, middle of this year. So is the slowdown likely to really continue for the next few months? And, companies as well as investors are cautious for these big events as well as the equity market valuations impacting the deals.
Yeah, I think they would probably continue the similar trend, what we're seeing for the next couple of months. And if you actually look at where the investments are going, they're really going in what we call the evergreen industries, which is typical manufacturing, finance, IT, which more or less remain unaffected. But in terms of investments happening in new age technology, or which have a larger gestation period, which is alternate energy, ESG, new tech, all that does not seem to be happening for the moment. And I think investors do need some greater visibility till they can actually make those and commit to those investments.
All right. So some of the sector rotation has really taken place, Prashant, with the changing, dynamics and economic factors as well. Now, a few of the new age IPOs are attempting to make a splash in the equity market with an IPO. How's the IPO trend and the pipeline looking? And how do you see the response to the new age companies? And there are going to be some big ones coming in.
I actually have a very positive view on that. And I think, let me just condition that positive view. I think companies need to demonstrate scale and scope. Companies need to demonstrate that they are making money. So it should not just be about a revenue model. It should be about a business model which works. And a proof of concept should already be there. And I think the third thing is the unit economics, which is something that is continuing to gain relevance as far as new tech is concerned. is something
So,
that
so
should also be
valuation,
demonstrated.
so valuation will be keenly watched out for still, and
Absolutely.
the appetite will develop only on that. Only 30 seconds now, Prashant. Where is the maximum deal traction really taking place in the near term, in the next few months, according to you?
Currently, if you see, it is basically IT and finance and pharma. These are the three places. But I think going forward, alternate energy, infrastructure, manufacturing, as well as new tech is something that I am quite hopeful that we'll see substantial investments coming in.
All right. So a keen watch on the deal street, and M&A activity has substantially slowed down, especially ahead of the elections. Prashant Mehra, thanks so much for your insights right here on CNBC TV 18. With that, we'll slip into a short breather, come back for more news and updates and all the stock market action on the other side.